Welcome to TheoTrade. This is Don Kaufman. Here we are doing the Theo Night video for October 26, 2016. Tonight I want to kick it off by taking a look at the XLE. For those of you that do follow some of the Theo Night videos on a day-to-day or night-to-night basis here, we had a bearish position placed in the XLE. Now, we didn't get a substantial sell-off inside of the XLE. This is about as mild as a down move as you could possibly get. Nevertheless, we had originally purchased a 72.70, okay? And these were the puts, and we purchased this put spread for right at 90 cents. Earlier today, we went ahead and closed this for right around $1.41. So decent trade. It's taken off. The reason I'm actually spending a little time on the exit in this circumstance is, number one, we're looking for right around and just over about a 50%, 55% profitability on the trade. So we hit it pretty much spot on over there. Really, why I'm pointing this out is because this trade was more about the strategy itself, okay, than it was the directional bias, because clearly in this case, sure, the market helped us out by backing off ever so minimally, but even with a minimal move in the marketplace, we still achieved, again, over 50% profitability in a short amount of time. In addition to that, okay, coming into earnings, we discussed Caterpillar. I've had a number of short positions inside of Caterpillar, okay, including, again, an in-out spread in addition to it. Okay, for those of you that do follow Caterpillar just a bit, I had a in-out spread on here. In addition to it, I'm also short just 100 shares of stock. Caterpillar coming off fairly hard and fast. This is one that, again, I'm going to wait for additional opportunities. If I get them, additional opportunities to short into any strength on Caterpillar. So in here now, all right, it's already off the 90 level into like 84. Caterpillar starts to pick back up a little steam in the next couple of days. Anywhere near the 86, 87 handle, I will go ahead and start to short into that again. That, of course, could be either using in-out spreads, or I may elect to hold a short stock position for the duration in there. Now, moving along, covered a little bit about the XLE, covered a little bit about Caterpillar. Of course, what would be a day without covering a little bit about Apple? This was an earnings announcement. Again, I'm not a huge advocate of earnings and earnings-related trades. Nevertheless, okay, I took a bearish stance in Apple, okay, and that happened to play out very, very nicely in this particular circumstance. Now, Apple, it's down $3 as of right now. Earlier in the trading day, I was able to take off a trade profitably. When Apple, though, was down about $4.60, I was able to exit a number of trades profitably. So ultimately, again, revolving around earnings, which I'm not huge into the earnings. Caterpillar had a nice trade in there. Apple, nice bearish trade in there. We have Google coming up on Thursday after the bell. Frankly speaking, I'm not sure I want to touch that one. We'll look at it here momentarily of what we can expect in Google. But Apple, okay, still feels like there could be some sell-side activity to live and breathe in this underlying. That is, it's down $3 today after the earnings. The expected move is about $5. Nevertheless, the stock has felt rather heavy all trading session long over here, even after picking up a little bit. Apple finding into the 115 level, though, but in the days to come, we'll look to see if it actually breaks a bit lower. Again, Apple feeling a little heavy as the trading session has gone on. Now, let's move over to Google for a moment. As I said, I'm not sure I want to touch this one with a 10-foot pole, but Google around the earnings announcement, one thing you want to take a quick glance at, the expected move is $41 with roughly a 72% volatility. Ironically, I checked into this. That is precisely what the expected move was in the last earnings announcement. Okay? The issue is that Google very often moves precisely to the edge of the expected move. So in this particular case, Google tends to be more of a coin flip, whether you want to be bullish or bearish. I don't necessarily have any definitive inclination here on the bullish or bearish side as I did in Apple and inside of Caterpillar. Nevertheless, hey, listen, when there are underlyings that I want to take directional bias in, you better believe I'm going to show you just that. Okay, last but definitely not least, and this is one that I don't think is on a lot of radar screens, but well, I'm going to bring it to you right here, right now. Go to the SPX. Now, for those of you unfamiliar with the SPX, it's the granddaddy of all the trading products out there. You know, today has been kind of a humdrum day in the markets in general, but the SPX is still going to do just shy of 1 million contracts, and there's still about 20 minutes left in the trading day. But that's even below normal contract size. So it is the granddaddy of all the trading products out there. Now, why am I bringing up the SPX? In this case, right, today, something that I've been watching day in and day out really stood out to me, and I'm going to just spend just 2 minutes and take you detailed into it. Now, you know, recent videos that I've done over here, I've talked about what I call the election spread. And what the election spread comes down to is this. Here we have a November 7th expiration and a November 9th expiration. Now, granted, everybody's talking about the election. There's all kinds of conspiracy theories and politics, just garbage flying about this, right? In the end, forget it. I just want to look quantitatively. What does that even mean? Okay, well, on a day-to-day basis, I've been watching not only the implied volatilities, but the expected moves. And that is, what does the market expect from, this happens to be November 7th. If you are unfamiliar with what's between November 7th and November 9th, well, it's November 8th, which is also known as Election Day here, right? So the Election Day will be, okay, November 8th. So November 7th, November 9th expiration, well, it's a sandwich right in and around the election. And as such, if the election is going to produce, okay, an increased degree of risk for the marketplace, it would be reflected in the differential between expected moves, okay, on November 9th and November 7th. Now, that's a little bit of a brain buster, right? You're like, what do you mean? Well, is the market expecting something substantially more to happen on November 9th than it is on November 7th? Okay. And frankly, the answer the last couple of weeks has been no. The spread between November 9th and November 7th hasn't been much more than about $11, maybe $12. Okay. But all of a sudden, yesterday and today, the spread is widening. And what that ultimately means is that there's risk, real risk now coming in and pricing more uncertainty to the election itself. Now, I find this interesting because if you listen to the politics and you listen to, you know, the different betting sites, it's all over, people. It's over. But it's not over according to the spread. That's why we're watching it. Okay. And in this particular case, you know, hey, a $14, $15 wide spread, when you it really starts to catch your attention when risk, okay, is 20 or even 30% greater in a 24-hour period. So what ultimately occurred over there? Neither here nor there. Again, I could care less right now about the politics. I'm just looking at the quantitative side of the options market, pricing in more risk. It's something that you really need to keep your eyes on in the next couple of trading sessions. I know I will, and I'll be talking about it here on some of the nightly videos here, keeping you in tune with, again, the election spread. It's widening. There's more risk apparent now for this coming election over here. And as such, we may see, okay, areas like the VVIX start to get bid up. And this is the volatility of the volatility index, which lately has been rock bottom. The irony is today started picking up a little bit. Right when we first noticed that spread to widen. Today's the first day. Well, guess what? The VVIX is also starting to get bid up. We want to see if traders are going to come in. Are they really going to start buying up volatility? And if they're buying up volatility, that means risk could be imminent coming into the election. So we're going to keep a close eye on the VVIX, keep a close eye on the SPX over there for any further signs. Thanks, everybody, for joining us here at TheoTrade. Enjoy the evening. Bye-bye.